Hey, it is Tuesday, and we're back with another episode of Go FUD Yourself. JD Gagnon here, coming at you from LA. In LA this week, super pumped. My good friend Kara, what is going on?
So it's kind of an interesting week for us because with JD away and I was away, you got extra guests all week. And you get extra guests all next week. I like that we're continuing to do this and not taking a break, even though we both get little breaks, but it kind of makes the show a little bit more interesting. You get random people hosting it. I hope it went well. I
had a weird thought yesterday that we should make we should build like a proper network. And so we have like different shows and different hosts, and we can build like a whole thing.
That's what I was trying to do with our weird community, but then,
Yeah, well,
makes participation.
We'll find some of our guests that have like a lot of people love them, and then maybe we'll figure out if they can do their own shows. That'd be kind of fun.
That'd be fun.
Have like a whole
exciting
little network.
Yeah, the Go FUD Yourself network.
It'd be awesome. Go. I don't know if the network could be called Go FUD Yourself, but we'll see.
Not?
Anyways,
who would stop us?
That's true.
Yeah, just saying.
Elon doesn't even know me, so
he doesn't care.
I wish.
All right, today we're going to talk about the business of crypto,
about?
which is what we were just doing. How do you have a viable Web 2-based business of crypto? But ConsenSys launched Linea, which people are stoked about. We're going to talk about that a little bit, and then Axelar partnered with Microsoft, and then we have a little bit of news update about the ye old Canadian crypto trio. It was almost a year ago that they announced they were merging, but I guess it's actually happening. And then because we're talking about DEXs and how it works and all of these kind of mergers and acquisitions, we're also going to talk about market share in terms of the crypto market today. And then the Bank of International Settlements came out with a report that isn't very forgiving of crypto, but loves CBDCs. So we might get to that and some SEC stuff as well. If we don't get to it, we'll get to that tomorrow.
Sweet. Quick reminder, it's a live show, Monday to Friday, 12:30 p.m. Eastern. Like, share, subscribe, help us share the love. We are on every freaking outlet pretty much, except for Apple Podcasts. We need to get on Apple Podcasts one of these days.
I was looking at it last week, actually.
Oh, really?
Mm-hmm.
Sweet. All right. Yep. Well, let's get into it. I was just about to yell at you to get on Spaces, but I forgot producer boy's not here.
Yeah, so I am RBL today.
So you're already on Spaces. That's why we got the invite so early. Oh, man. We are cooking with fire. All right, where are we starting? Nikki, what's up? Morning.
Okay, we're going to start with Linea or Linea. So ConsenSys launched. I'm making fun of the name on purpose. So if you look at what the term means, it actually means Stripe. And I wonder if this is like a tongue-in-cheek to the Web 2 Stripe, because Stripe has tried to get into blockchain a few times. And then every time they announce that they're doing that, like 3 days later, they announce massive layoffs and they make no moves towards blockchain. So I don't know that ConsenSys is that vindictive, but in my mind, this is a direct throw at them. So they have whatever. They're trying to reduce costs. They're trying to make things more efficient. They have a new L2. People seem excited about it, but I don't know that it's really that unique. We have 4 or 5 other players doing kind of the same thing, don't we?
Yeah. So when I first saw this, I was like, what? Like, why the hell does this even matter? And I'm still not quite sure why it matters, to be honest. I feel like, so essentially it's a ZK proof type L2, and there's a EVM, it's compatible with EVM. So effectively Polygon just did that with ZK EVM.
And so did Zero Knowledge Sync, right?
Yeah, ZK Sync, and then there's Optimism is optimistic rollups. Arbitrum is also rollups. So I want to believe that Joe Lubin, given his connection to the beginnings of Ethereum, etc., I want to think that the technology is going to be a meaningful iteration, because the core team really, really, really understands it. Not that Polygon and all the other ecosystems don't understand it, but Joe has done a lot of pretty interesting things. Obviously ConsenSys, obviously Ethereum, and a bunch of other things. So it's it's kind of interesting. I'm just not sure that, like, there's a whole bunch of VCs on board. I think it was 30 or 40 VCs.
30 VCs.
Yeah, got involved, and they've apparently got a whole bunch of mainnet apps that are going to launch and all this stuff. It'll be interesting to see why and how this evolves. I was saying the other day that to me, the L2, L1 game is zero sum to a certain extent. If you want to bring assets into an L2, 9 times out of 10, they're coming from the L1. And so does it look that good for the ecosystem? I don't know. Does it help? Maybe.
I don't know.
What I think is happening is this is a really good way to make a bunch of money.
Okay, but this is what is interesting is that they're not launching a token.
Do you know why?
No, tell me why.
Well, there's a whole host of reasons, but I would say the first one is they're probably going to try to play the airdrop hype.
Yeah.
And so that's what I mean. It's a way to make a whole buttload of money for insiders, not even just insiders, people that understand the game and airdrop farming and all that stuff. I don't know if they'll do a token. That they would be crazy to do one right now.
Yeah, that's what I was thinking.
With the uncertainty, I think. But what I suspect will happen is they'll scale this a little bit, try to get to some critical mass of platforms, and then they'll announce some crazy airdrop or some crazy thing that they're going to do once the rules are a bit more clear from Congress, and then it'll happen. I want to be optimistic. I like to see new ecosystems pop up and new business models come into play and new tokenomics.
They're claiming that they'll have a more efficient bridge, fast finality, and that gas fees could be 15% lower per transaction. But I feel like we always have these claims, and they're always 15, like good.
15 times lower, but that's
15 times. You're right.
That's every layer 2. Like, I mean,
right. That's kind of my point. It's not really a USP, but
I don't know. I want to remain optimistic about this. There's got to be another angle that they haven't.
Consensus about it.
Remain consensus?
Well, if you remain optimistic, never mind.
Yeah, I get it. I get it. But it took a minute. I'm a little slow. It's earlier here than normal, so my brain's not quite firing on all cylinders. Evie, what's up, my friend?
All right. So we don't know exactly why ConsenSys is doing this other than to make money. Maybe they have some sort of innovative tech that we don't know about, but they are actually going to launch at ECC in France, which is July 17th, I think, that whole weekend. And so they're planning on doing kind of like a slow rollout during that week that includes a bug bounty, and like you can present your bug bounty at the conference and that kind of stuff. So I don't know. It's kind of a fun hype mod too. If you're there, check it out.
People there, spend some money on all the hoopla. It'll be good. I'm cool. Really not impressed that I can't go to ETHCC because everybody seems to be going.
I know, it's wild.
It's like insane. I don't think any other conference I've gotten as many. Hey, are you coming? Let's meet up. Like what?
Yeah.
And of course I can't go.
That's what you get. So also in the business of crypto, we have Axelar partnering with Microsoft, and I haven't actually seen a lot of like crypto Twitter about this. I don't know that people care too much, but the idea is that it's a private and public blockchain that are kind of going to like merge. So that's an interesting way to look at it. And then of course, Azure is going to be on their Microsoft marketplace. So the idea here is that they'll be able to sell to other businesses as well. So if you like what Axelar is doing, now you have like an easy spin up from them.
Yeah, this is an interesting move. There's a few kind of bridge players in the space. Really the only major ones is Axelar, Wormhole, and Layer 0. There's some others, obviously, and not to discount any of those other ones, but those are like the 3 that have the lion's share of market activity for bridging. And so I think, in an effort to differentiate and to find ways to really expand your business model, I think this is a smart move on Axelar's part. I'm actually kind of surprised that they're the first ones to do it. It's going to be a slow burn. I mean, they're going to get on the marketplace. They're going to pick up clients really, really slow. But I think as private blockchains become more common, Microsoft, remember Microsoft years ago, well, you might not remember this, but like 4 or 5 years ago, at least, Microsoft had a private blockchain, like whole platform where it was kind of like Lego blocks for building your own private blockchain. And they had
I remember that.
A whole business team surrounding it and all this stuff. And so I think they've really had this thesis that there's a greater potential need for private blockchains even than there is for public blockchains, because so many businesses can use the advantages of the technology, but they don't need it to be or want it to be an open network. The challenges that presents, though, is that blockchain often lives in isolation, and there's, it's very, very difficult to get tooling and assets in and out and on and off ramps and all of this other stuff. It's a fairly complex build out for a new ecosystem like that. And most of these institutions or enterprise, like, I mean, just building a blockchain is like a big deal. Now, if they have to think about all this other stuff, it's a lot. So Axelar, this is a smart move, I think. They're building the infrastructure to be able to be a vendor for new blockchains and give them that connectivity. And I totally resonate with this, because I think, you can either mine the gold or you can build the shovel.
Yeah.
And this is, in my opinion, one of those shovel examples. So I think it's a good move.
It's also kind of interesting because Azure has different apps and services themselves. And so all of that is going individually on the Microsoft marketplace. Part of why I think that's interesting is it looks like a big boom for Microsoft in terms of blockchain, right? Because they'll have 43 blockchains supported across over 25,000 quote unquote applications. And so for those who aren't paying attention or those who aren't in blockchain, they're going to just see Microsoft as like suddenly taking off in this space. Right. And I think that's a really interesting
thing. Microsoft, I'm kind of impressed actually with Microsoft lately. Whether I agree with their $10 billion investment in ChatGPT or not, I think they've gotten themselves back into the limelight, and they're really starting to innovate here, which is kind of interesting. Maybe not so much innovate, but they're really aligning with, I believe, where the puck is going as opposed to where it is. And that's kind of interesting. AI, blockchain, they've kind of really leaned into both and are investing fairly heavily. So yeah, I think it's a good move. I'm interested. Axelar, again, in my opinion, Axelar was kind of behind Wormhole and Layer Zero.
This might kick them ahead.
It's a good way for them to differentiate, right? To do something that the others aren't, and find some blue ocean that they can exploit in a positive sense. So I think
this is crypto business. So we had a product launch, and then we have a partnership, and now we can also talk about an M&A, merger and acquisition. So we talked about this a few months ago, that there are 3 Canadian crypto companies, and basically the only way for them to continue to participate in crypto land Canada under the current regulation is if they all merge what they're doing, and it basically makes becoming regulated cheaper. But they have changed the terms of how this is going to work, and now it's actually going through. So WonderFi will be acquiring the 2 other companies. So previously they were all looking at merging together, and now it's going to be in this more acquisition style way. I couldn't really find any information about why they did it this way instead, but I thought that you might have a hypothesis.
The only hypothesis that I have on this, and this is Coinsquare found themselves in some hot water a couple of years ago. And some of their executives were charged from the Canadian Securities Association, and they received some penalties, and there's a whole bunch of things that it went on with, like wash trading and a whole bunch of other things on the application. And they had proof of that over years, and price gouging and some other shit, and which is like pretty common in emerging markets. Like, these businesses make weird decisions, and then eventually someone's like, what the hell, that's illegal. Anyways, so they that's my only thesis, is that maybe that, the sentiment around Coinsquare. I don't know anything about CoinSmart.
Yeah, I think that's kind of interesting too. So Coinsquare's not doing well, but then CoinSmart has BitBuy. So if you haven't heard of CoinSmart, you might have heard of BitBuy. And BitBuy is supposed to be one of the most used DEXs in Canada, which is interesting because neither of us have heard of it or used it. But basically, together, this new company will already have, in terms of registered users, 4% of the Canadian population. So not of the Canadian market, but 4% of the Canadian population will already be registered.
Yeah, I mean, to most people watching and listening to this, I mean, that's kind of an underwhelming number. 1.6 million. Like, that's like a blip on the radar. But in Canada, that's kind of a big deal in a lot of ways.
We only have about 38 million people in Canada.
Yeah, and there's 600 million in assets. So I mean, it's not a tiny acquisition. I mean, I've used WonderFi and Coinsquare a lot. They both leave a little bit to be desired, but I like this move. I think bear markets and then regulatory changes are good in a lot of ways, because they force businesses to rethink their models. They, it kind of sucks for some of the small guys that end up just getting crushed. But
Sure.
I think this is good.
Yeah, it's interesting. And I also find it interesting kind of what led us here, right? So we saw a lot of regulation come up. A lot of people pointed to FTX for why that regulation was coming up, whether that's what the Canadian market was responding to or not, or what Canadian governance was responding to or not. I don't know, but it's interesting because as we see the SEC and the CFTC lawsuits continue, and we see other areas crack down, Australia investigating Binance, Germany investigating Binance, and so on and so forth, we have seen quite a lot of market share changes. So all the facts and figures I have are specifically from America, and they were picked by Reuters. So I will share that afterwards.
Reuters.
Sorry. Really? All these years. But what's interesting is that obviously Coinbase and Binance have had substantial market share drop, and Kraken has picked up a good amount of market share, but those aren't equitable. So that means there's a lot of small players who are maybe benefiting from the current regulatory lack of compliance from big players, but also how long are they going to benefit for when they also need to become regulated?
Another point here that requires a little bit of critical thinking is that the people that are not trading on Binance US and Coinbase would also not be allowed to trade on Kraken and others because you're American, and that's so. I actually think that there's some negative sentiment around Binance Global that I think is probably driving some movements globally to Kraken and some of these other exchanges, Bitstamp. I don't even know what LMAX Digital is, but
I know, but they're here. I've actually grabbed.
Apparently it's on the radar. So, but anyways, I think it has a lot less to do with these entities taking users from Binance US and Coinbase. Rather, I think Binance US and Coinbase have just lost activity due to, pending regulation or uncertain regulation. And users don't want to use it. They've stopped, supporting a lot of different types of products, a lot of different types of assets. Coinbase hasn't. Binance US did. They delisted like everything. So, anyways,
look at this graph. Look at it. I'm going to post it on Twitter after. Sorry, I know
we have a graphic.
I know it's very exciting. But what I think is interesting here is, again, I'll post it on Twitter after for those of you who are listening in Spaces, but we are actually seeing a market share change, right? And so when we see this market share change, does that mean, like what you're saying, does that mean people are pulling out, or does that mean that they're putting their funds elsewhere?
Yeah, I would suspect that, most of the people in the US that can't transact on centralized exchanges are now using DEXs as a viable alternative.
But what about those who can transact on centralized exchanges but are choosing not to because of the negative sentiment? Right? That's where we're going to see this weird market share shift.
That's also possible. I mean, a lot of entities and individuals were burned, right? Like if you're a big enough creditor in the Celsius thing, well, probably not even Celsius, but FTX and others, like you're going to get some of your resources back. Some people got them back early on or even before bankruptcy and different things. But if you're just like the average run-of-the-mill user like me, they don't care. What is going on here with this light?
Your light, I don't know.
It's tweaking out. If I turn it off, though, we won't be
ghosts.
If I turn it off, you won't be able to see me. Anyways, yeah, I don't know. I think we'll have to see how this all shakes out.
It's kind of interesting. So, also in terms of regulation, we have a new report from the Bank for International Settlements, and there's a meeting this weekend, and then there's a follow-up meeting September 9th, 10th about fintech for the G20. And so basically, the BIS has stated that we missed the boat. Crypto has not been innovative enough. We have not had social innovations that are well enough. We are not viable as currency. We are not efficient enough. We are not accountable enough. And instead, they are recommending, well, maybe recommending is a strong term. Instead, they are forecasting CBDCs will take over.
Yeah. Can we say FU yet? What day is it?
I think that's on Friday.
But I mean, this is a good one to say FU. Like, the BIS obviously has a bias here. They want CBDCs because they believe they can implicate themselves into the CBDC structure and still, seek rent, which is what they've been doing for years. I think this is a nothing burger. I don't really give a shit what the Bank of International Settlements says. I think it's like,
no, but naive G20 leaders might, right? When they go into this meeting on the weekend.
But I think all leaders are thinking, we don't like crypto because it takes some of the power out of our hands, regardless of what country you're in and regardless of what type of regulation you have. It still creates more freedom and flexibility and global access for many, many, many users. And so no G20 nation loves crypto and is like, hey, bring it, let's go. They might say that publicly, but that's not what they're actually thinking. So I think they're probably all, for the last number of years, trying to find ways to,
absolutely,
snuff out the flame. But here we are.
The criticism that I found most interesting here, and it is a direct quote from the report itself, is that crypto failed to harness innovation for societal benefit. And part of why I find this an interesting statement is that they don't then go on to talk about other societal benefit that we might have through other monetary systems or through current fiat or CBDCs. It's just kind of like a distractionary tactic in terms of debate. They're like, well, they didn't do this. Not that we're going to, but they definitely didn't.
I mean, again, part of me says like we were up well over 2 trillion as a space. I mean, there has to be some societal benefit somewhere. Somebody had to benefit from this whole thing if $2 trillion worth of value funneled its way into it. I mean, 2 trillion is a big number. It's small compared to even US equities, but it's still a big number. $2 trillion, like that's a lot. So
just thought it was interesting that was one of their big points of
contention.
All right. The SEC, because we love regulation, we're going to kind of close off today with the SEC says that Coinbase knew what they were doing.
So I spent the better part of last week trying to find some light in the darkness to say that the SEC hasn't completely screwed us. And I even a few times found myself almost defending Gensler for being in an impossible position. I actually had this conversation yesterday. And then I read this shit today. And I'm like, no, they're still idiots. Like, this is ridiculous. I mean, and this is going to continue. I think part of me thinks we just have to kind of, we're going to report these things but we shouldn't think too hard about what they're saying, because it's all lawyering and positioning right now. And they're, putting out these releases and comments to try to influence the legal decisions and so on. I don't know. Coinbase asked explicitly for guidance. They never received a response at all. That's super public. Like, they've done it years ago. This whole thing just needs to go away.
Yeah, to me, this continues to be a nothing burger every time it comes up. I'm like, oh, they're still fighting? Great.
This is going to go on forever. Like, once until we have new laws in America, and then maybe they'll be like, well, do we want to pursue this if they're, I don't know.
It's expensive though. Like, I'm surprised that Coinbase is able to continue to carry the cost of fighting this.
Yeah, Coinbase has pretty deep pockets. I mean,
I know, but it's just like, if you think about it from a business perspective, like, wouldn't you just cut your losses and like exit America?
No, you're publicly traded and all your clients are American. Like, that's a little bit easier said than done, I think. But
absolutely.
Anyways.
Just interesting. All right. Finally, this is just kind of at the very end. There was.
Yeah, we're talking about this Rodeo thing.
Yeah, there was a hack on Rodeo, and what I want to say, so it's Arbitrum based. The thing that I want you to know is that if you heard about this last night, it's actually been updated, and the initial loss is way less than they had reported. So they reported the first loss as 1.5 mil, and it was closer to 880,000, but in ETH, not in USD.
Yeah. Well, first of all, their platform's called Rodeo. So that's interesting. What?
You don't love that?
I just think it's weird. I struggle with like platforms named after fruit and vegetables and animals and events.
Yeah, well, Linea by our very first story is a medical term for like skin pigmentation. So I mean,
yeah. Anyways, these suck all the time. Like, but this is just, again, it's a symptom of the way that the space currently operates. Again, I mean, we've seen a lot of really, really big exploits. This is a relatively small one. Yeah. It's still almost $1 million, but in the end, it's almost not worth it for the exploiter. Like, they probably would have made more money by just reporting it as a white hat.
Really?
Than by the time that they fence this money and clean it, if they even can, because it's not that simple. They might end up with 10% of this. So 80 grand, maybe. And you're worrying for the next number of years about law enforcement and or angry people. You're always looking over your shoulder. This is not worth it. I don't think.
My interest that lies here is we keep seeing more and more hacks on Arbitrum, which tells me that Arbitrum has really picked up the pace in terms of usability and market share.
Yeah, I mean, Arbitrum's had a lot of hype for a while, and so there's a good amount of locked value there. A lot of it rotated into Arbitrum because of Arbitrum airdrop. So it just kind of makes sense. Like hackers are going to go where the most TVL generally is. They're gonna look at as many platforms as they can to try to figure that out. So yeah, I don't know. Be careful out there. Oh, by the way, PSA, public service announcement. There's a weird scam going around right now where often what these people are doing is they're sending gas tokens.
Oh yeah.
They're sending gas tokens, and if you try to revoke permissions to the gas token, it actually gives them permission to drain your wallets. And it's happening to a ton of people. So if you see random gas tokens in your wallet, anybody that's listening, random gas tokens in your wallet, do not revoke permissions for them until you figure out, and I don't think anybody's suggested how to deal with this yet, other than don't revoke permissions.
Yeah,
so
just hang out. Yeah.
Random gas tokens, just hang out. They can't do anything until you interact with, unless you sign a transaction or do something to remove them.
It's an innovative form of phishing. I have to give them that.
People are getting sophisticated. I mean, but again, the space is getting better at identifying this and preventing it and finding solutions. So, but yeah, important public service announcement. I got another public service announcement. Okay. We're here every day, Monday to Friday, 12:30 p.m. Eastern. Like, share, subscribe, bookmark us on Twitter, please. It really helps with the reach, spread the love, and get the word out to more people. With that, I say to you, Kara, go find yourself.